Hello and welcome to BloombergQuint. We continue our coverage here of the WEF's annual meeting. It's day 2. I have with me Prashant Ruia, who did the biggest FDI deal last year in India, 2016 that is, when he sold almost all of his Essar oil business to ROSNEFT of Russia. Prashant's here to talk about that strategic exit, if it is a strategic one, and about the various group businesses. Was it a strategic exit? Was it an exit born out of the fact that the group had a large amount of debt and that you needed to find ways to pay that debt off?
No, I think as a group, one of our philosophies has been to build businesses from scratch, and that's something which we have done over the last 2 or 3 decades. And once the business is built and once it's mature and generating the kind of cash flows and growth which we expect when we make these investments, we look at monetizing opportunity. And we felt specifically in the case of Essar Oil, that the value which we got was good, was positive. We were happy with that, and we felt that this was the right time for us to monetize this asset. It's something similar to what we did when we built the telecom business from scratch and finally exited to Vodafone about 5-6 years ago. So it's a similar kind of thing. That's what we believe we are good at, and that's what we did.
Okay, what exactly is this value that you're talking about? Because we still haven't been able to figure out what the per share price is. I ask you this for 2 reasons. We'd like to know what you sold per share, and also because you have standing instructions, if I can put it that way, from SEBI, that any differential between this price and what your delisting price was ought to be paid off to whatever the remaining shareholders are. Now, that's a much secondary issue, but we'd really like to know what the per share price is.
So we haven't yet got to the exact per share number, because we would get to that at the time of closing. However, the enterprise value of the transaction is $12.9 billion. That's already very much in the public domain. At the time of closing, which is not very far away from now, we will arrive at the final equity price per share, because obviously there are many adjustments from the enterprise value down to the equity price.
But you have an sort of a approximation.
However, we've already come out to say that there will be a higher price which will be paid to the minority shareholders.
Correct.
Just to say 2-3 things which some of your viewers may not be fully aware of, but if you look at the Essar Oil delisting process, when we kicked off the delisting process, the share was around 90 rupees. In fact, little less than 90 rupees. By the time we actually delisted, it was around 262. So there was a significant premium or up lift which the shareholders got at the time of the delisting. And as we have said, there will be a further payout when the deal closes. Now, to the other point which you made, which is that we are on the SEBI point.
No,
this was actually
you proposed that.
Exactly. This was actually our suggestion.
A very significant point to make. I wasn't trying to suggest that SEBI has given you orders and you were trying to subvert them. I know you all made the proposal, and I know that they accepted it. I was just curious to know what the per share price is.
I think
an approximation.
It's really the first time, Menaka, that a company is going to reward its shareholders even after the company is delisted. There have been many delistings done in India in the last 20 years. And this is going to be the first time that shareholders are going to benefit from a deal which is happening post the delisting transaction. So I think it's and it was something which we suggested because we wanted to ensure that all the shareholders of the company get a fair return.
Is it a substantially higher amount? Because here's what I'm trying to understand, right? When you break it down to per share, are you exiting at almost the same price as the delisting was done? And if that's the case, then how come ROSNEFT is not paying you substantially more for control?
Right. So it's a very good question, actually. The price which we are going to finally close the deal, as I have said, will be more than 262. It will be the same price which we will get as the majority shareholder
and the minority.
So it's the same price. And the reason the price is not going to be significantly higher, is to your question about the premium, is because a lot of that already got built into the share price in the run up to the delisting. Okay. So it was nearly a 300% run up from 90 rupees to 260. So a lot of that premium to an extent has already been built in, and whatever will be left of that will be obviously shared when the deal closes.
Okay, you said this was part of your strategy to be able to monetize assets. This was not done under lender pressure at all.
No, it wasn't done under lender pressure. However, I mean, clearly we've been very open that this has been, from our perspective, a large part of the funds which we will get from the monetization will be used to delever the group. We believe, and I've been saying this, that from our perspective, this really is one of the largest deleveragings ever done in Indian corporate history. We are going to deliver about $10 billion. $5 billion of that will be, at the operating company level, and the other $5 billion at the holding company level. And sure, this is one of the spin-off benefits, of this transaction. But it certainly wasn't the prime reason for doing the transaction.
You have an upstream business in India.
Yes.
Coal bed methane.
Coal bed methane,
Coal bed methane, or CBM as it's more commonly known. You have a refinery in the UK, the Stanlow refinery, which you acquired a few years ago. You are going to continue to stay invested in that, or is this a whole-scale exit from that business altogether, which is oil and gas, both upstream and downstream?
Yeah. So basically, Menaka, the way we have looked at it is we have principally monetized Essar oil, and that entails the Indian refinery, and it entails the retail, of which we have built now more than 3,000 retail outlets in India, is part of that company. We are not exiting any of the other businesses which we have. So, and again, just to give it in perspective, Essar oil as part of the Essar group is about 25% in terms of our
the contribution
to the group. So yes, it's a significant piece. It's a significant part of the group. But it's, there's still a lot of other businesses which we have, and that's what we're going to concentrate on.
Why hold on to CBM? Why hold on to the Stanlow refinery when you're getting out of what was your most valuable asset in this stream of business?
There's a huge amount of growth which we see in the E&P business. We see we are the largest player of coal bed methane in the country, which is and then the next big thing in India, hopefully going forward, will be shale gas. And so there's a lot of opportunity in the E&P space, which we certainly would like to focus on. And as far as the refinery in the UK goes, it's about a 14 to 15% market share in the UK. It's a very significant part of the UK oil piece, and the company is doing strong. This company is doing very well. Refining business generally, both in India and internationally, is doing very well. And so we didn't find the need. We still think there's a lot of growth and a lot of potential. We've recently launched a retail foray in the UK. So we currently have close to 27 retail outlets, and growing that to about 400 in the next 2-3 years. So we feel there's a lot of growth opportunity still in that business. We are upgrading the refinery. We are spending, we are investing nearly $200 million in capex to upgrade the refinery. So,
there's no plan to exit those businesses anytime soon.
No, I think from a monetization perspective, I think once we have completed and closed Essar Oil, we're pretty much, from a group perspective at least, we have that's off the table right now.
Okay. The money that you use from the sale to ROSNEFT, you said about $5 billion at the operating company level, $5 billion at the holding company level. How much debt will you have left over at a group level, ex-holding company, so non-holding company after this?
So it's about 50,000 crores.
You'll have 50,000 crores left over.
And
most of it can be ascribed to your steel
business?
The
steel and the power business, yes.
Okay.
Mainly.
Yeah.
Right? And then we've got many other businesses which are not debt.
Look, now steel was in a really tough spot a year and a half ago.
Right.
Things have improved. A, the commodity cycle's improved.
Yeah.
B, all the, I use the word protectionist in a complimentary way. The protectionist measures by the Indian government to protect from dumping by Chinese companies have also helped, right? Where are you in the steel business now? Last we heard you were looking at a restructuring. We couldn't figure out whether it was under the earlier CDR rules or the new S4A rules. What's going on?
Yeah. So firstly, steel is a cyclical business, and every time we go through a down cycle, unfortunately in the steel industry, the down cycles have been fairly severe. And this time around, it was driven primarily by the huge Chinese export of volume, which basically came out of the fact that their own domestic consumption came down.
Right.
And since they produce 50% of world steel, when they start exporting huge quantities at very, very low prices, it has a huge impact on the whole steel industry. The whole industry went through a very difficult patch last year, and because of this, and it wasn't just India which has taken protection measures. I think, in fact, if you look at the world today, the US, Europe, South America. We'll get into the US protection in a larger way. By the way, the US protection for the steel industry is significantly more than what the Indian
that's why
market
I mean
says.
it in a complimentary way, because the word's being bashed around a lot nowadays.
No, I think it was required because it was unfair what was happening. It was dumping at a level which we have not seen before.
I agree. So
the government took the right steps. We
are restructuring your steel
we
business?
are before coming to the restructuring, from a business perspective.
Okay.
We are today operating at about 85% of capacity.
Okay.
We believe this is one of the most modern and most efficient steel plants in the country. Our margins will be in line with our peers in the integrated steel plant companies, and more importantly, what Essar Steel suffered from was a 2 or 3 year period where most of the natural resources which were assigned to it got cut off, and that was a government. It happened because of government and Supreme Court action. Our natural gas, which is our primary source of fuel and energy, got disconnected. But now that the oil prices globally have corrected, we are able to buy natural gas in the form of LNG and run the plants fully. So companies now running and the operating margins and the operating revenues are pretty much in line with our projections. Coming to the restructuring, clearly there was a period of 2 or 3 years where the operations of the company got hurt, and we were operating at literally 20 or 30% of our capacity because we didn't have any fuel, and that period we got on some extra debt, and we invested a lot of equity during that period. We have invested close to 18,000 crores of equity in this company, right?
And what's your total debt in steel is 30,000?
No, it's about 40,000 crores,
40,000.
right? So that 40,000 crores is slightly higher than what we had originally projected because of the delays, and that's what we're trying to address as part of our restructuring, and we hope in the next 2 or 3 months.
Is it under the S4A framework?
I'm not
it's
sure.
Very confusing. Restructurings in India are very confusing. They used to happen under CDR. They're now supposed to happen under S4A. Are you doing it under S4A?
I'm not sure which scheme finally is going to go
under.
There
is only one scheme that's operational now. CDR is closed, so it's only S4A, I suppose.
No, I think there are a few options which the banks are considering. Currently, the S4A, the way the S4A is currently designed, not too many companies are falling into it.
Well, one has, which is HCC.
And which didn't have any term debt.
Okay, so that's the twist there?
No, it's not a twist. It's just that the current way, the guidelines are formulated, not too many of the companies which require restructuring are currently falling into that guideline.
Okay, so if it's not S4A, or if you can't tell me what scheme it is, can you tell me what the modalities of the restructuring are?
I don't want to specifically get into the restructuring the scheme, and the reason is that it's not yet finalized with the lenders. But I do believe that this will happen in the next few weeks, and the moment we are in a position to talk about something, I'll be happy to share the details. But we are this is a company which has invested 50,000-60,000 crores in terms of assets. It's a company which is today a 10 million ton steel company, and it's it's going to be 15% of India's market.
Okay, you did not originally intend to exit from Essar Oil. You said you got a great offer. You exited from what one of the group's core businesses. If you get a great offer, are you likely to exit from Essar Steel?
No, I think Menaka.
Because at one time there was this rumor that it was on the block, and nobody was sure whether it was or was not. So I'm asking you up front.
That's why it was a rumor.
Would you exit from Essar Steel if you got a great offer?
No, I don't think. First of all, as I said, from a group perspective, monetization pretty much is right now done. It's a big deal which we have done, and we feel there is no need for us to do anything else right now. And I think from a deleveraging perspective, whatever needed to be done, we think we have done. And I think we're looking at growth in our in the rest of the businesses.
Which is shipping and ports.
We have ports, we are India's second largest private sector port operator. We are in power. We have about 6,000 megawatts of power. We have the steel business, and we continue in the oil and gas business. and we continue to invest in the services space, whether it is the BPO business or whether it is some of the other spaces which are connected to that, which we continue to look at seriously.
So you're not going to sell steel? 1 year answer I'm asking you, not for 2018, just 2017.
No, I thought that's what I said.
Okay, no, I'm just confirming that.
Well, you're going to do it again. I'll do it again.
This business has recovered and revived, but now the energy business, not just
Right.
yours, but everywhere in the country, is suffering from excess capacity, not as much offtake, not the right kind of modernization. The Uday scheme's been a promising.
You mean the power side?
Power sector,
Right.
yeah. The Uday One scheme has been a promising starter, but we are not seeing the reform levels we need to at the state point. From the state point of view, what's your take on how energy will look through the course of the year? Power.
I think power is suffering, or was suffering from 2 or 3 issues, and I think a couple of them have got resolved, and one is still not yet. The one which has got resolved was the availability of fuel, which was primarily coal, and that's now freely available, and government has done a fantastic job. Coal India is performing very well,
production considerably.
and so there's sufficient coal available, so that problem is off. Second was the cost of the coal has come down a lot, so that's made the industry much more competitive. I think the third and the biggest part of it is the demand side,
which is DISCOM reform.
DISCOM reform and demand. The actual demand for power. We haven't yet seen a huge pickup in that the way we had projected. India has invested huge amounts in building, large amount of capacity, whether it's coal-based plants, gas-based plants, doesn't matter, but huge amount of capacity has come online in the last 2-3 years, and the demand hasn't grown in the same way, which is the reason why today's spot prices at the grid are at 2.5 rupees a unit. So that's the third piece, which we hope, because of the Uday scheme and because of the general growth which we are all expecting this year, should deliver, and in the long term for sure it's going to come. The question is how quickly.
How much debt do you have on your power business?
We have about maybe 17,000 crores of debt on the
Do
power
you
business.
see?
That includes working capital. So
Do you see that, not just your power business but others as well going through the same problems from a leverage point of view as the steel business did in the next 12 months or so?
No, I think this
Because
whole
isn't going to move fast,
leverage,
right,
leverage is a problem if the assets are not delivering. You can't build these. You can't
But if
build
you don't have
in these
demand and
sectors.
therefore no offtake of power.
Exactly. So the
then what do you do?
offtake of power is on 2 counts. One, many plants came with PPAs, so they are able to sell their power against the PPAs. Yes, some of those PPAs, even though they have PPAs, they are not lifting power. So that's an issue. And then the rest, if there are no PPAs, then there's a problem. That's what I said. That's the one piece of this whole.
So you don't see more stress in the power business because of
No,
this
because I
in the
don't
next 12
see
months?
there are no there's no great investment happening right now in the thermal power or gas-based power space. Investment is happening currently in the renewable. And even in renewable, if you look at the size and scale of what's happening compared to what was done in the other 2 spaces, it's small. Yes, they're talking about 10-15,000 megawatts a year, but we built in thermal and gas-based power, we built 100,000 megawatts in the last 3 years. So there's no new investment coming, and therefore the existing investments which have already come will get consumed, will get absorbed
Is renewable
into
on
the
your
system. Yeah, I mean we're certainly open to looking at
Solar?
renewable. Principally, I would say solar, absolutely. And in any case, there is a minimum requirement now.
How will you go through down that road? Organically, inorganically?
No, we are generally organic. We look at things.
Just asking if you want to.
Yeah. So we look at things organically, and yeah, I mean we're open, but it's still early days, I would say.
Okay, business outlook in India, Prashant?
Business outlook.
Things were looking better a little bit last year, and then we
After
had
the-
demonetization,
Yeah.
and the jury's out on that. And no business leader wants to comment on it. So, I don't know what to ask you, but I do want to ask you whether you see private investment coming back at some point this year.
So I think I think it's fair to say the single issue which we need to focus on is getting private, basically investment back in the system, and basically creation of jobs back in the system.
Yeah.
Those are the two things which needs to kick in. We have seen significant amount of growth still in the consumer end of the country. So any business which is consumer related has seen growth even now, last year, this year. But the investments related to that are fairly, small. But that's happening, and that's happening at double-digit growth levels. What we haven't seen is the infrastructure end, and frankly, I still feel that we have some more time before all the existing investments which are already made will get fully absorbed, which will then kick in the next investment cycle.
We've seen a substantial cut in rates in the last few months,
Yes.
and there is now clamour that there might be a fiscal stimulus as well coming up in the budget. Not fully convinced by that argument, but wanted to ask you whether you think it's necessary for the government to do that.
Well, first of all, there's been a significant cut in rates, but I'm not sure that has got fully transmitted into the industry.
Sure.
There has been a big gap in the actual transmission. It's happening, but it's not happening as quickly,
fast
as rapidly as it should. And again, that will hopefully stimulate demand, and then that will help in absorbing the surplus capacity which is currently available, which will then lead to the new investment cycle. So that's what's going to happen, and I think it's going to take a little bit of time.
Fiscal stimulus in the budget, is that what you're betting on?
I think the government is looking very seriously at basically kickstarting the economy, and interest rates, in my opinion, are a very important piece of that, and certainly their own investment through their public sector and through their own schemes, and if we can get some stimulus, I think it'll help.
Okay, so one final question, because we are in Davos and we spent all our time talking about India, but that's primarily because most of your businesses are there. Is it going to be a year of uncertainty? Everybody's talking about Trump, Brexit, not very sure where China is going to land.
So again, a little bit selfishly, if you look at it from a business perspective, in the US, people are actually quite positive.
I think they're talking in two tongues, because they're saying growth's coming back, but we don't know what Trump's going to do.
Right. So from a business perspective, it's looking a lot better than what it did a year ago, in terms of growth, in terms of jobs, in terms of the sectors which got a little bit alienated, in terms of manufacturing in the US.
Yeah.
So all of those, I think, positive. So if you talk to any US American business leader here, I think you'll get a positive feedback. I mean, about what he can do otherwise,
Nobody knows.
I don't know the answer to that question, unfortunately.
Okay, so if the US grows, look, it's the world's
good.
leading economy. It's good for everybody
Absolutely.
else in the world.
Absolutely. And I think, again, from a European perspective and from a UK perspective, they've seen huge depreciation of their currency. In the last 3-4 months, they've seen more than 20% depreciation of euro and pound. And that's got to be good for growth from their perspective, because they'll be a lot more competitive now.
Let's see how long that lasts. I think yesterday President-elect Donald Trump tweeted that the dollar is too strong for his liking. All right, that's the world we live in. Prashant, thank you so much
Thanks
for your
a lot,
time.
Menaka.
And thank you for speaking to BloombergQuint.
Thank you very much.